Money Sense is brought to you with the support of OneTradeX. OneTradeX, the Cayman Islands' #1 choice for online brokerage. OneTradeX knows there's more than one way to invest. OneTradeX is the Cayman Islands' only fully licensed online broker-dealer, offering discount trading services to individual investors and traders, hedge fund managers, and family offices. OneTradeX has the most competitive online trading prices of any offshore broker worldwide, with no custody or management fees, free demonstration accounts, and no charge to open an account with a $5,000 minimum deposit. Trade stocks, options, futures, bonds, and Forex. Learn more and open your free demo account today at OneTradeX.com. OneTradeX, the Cayman Islands' #1 choice for online brokerage.
Live from Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
Goldfinger, he's the man with the Midas touch, a spider's touch, such a cold finger beckons you to enter his web of sin.
Good morning and welcome to Money Sense with me, your host, Simon Caudry. I'm delighted this morning to have with me Neville Hicks, who is a co-host of the show and a member of the CFA Society in the Cayman Islands, and as our guest this morning, Andrew Pillar. Andrew is the CEO of the Sentient Group, which is a private equity natural resources company. This show is going to be a show about gold and natural resources and commodities. Today we talk gold specifically. What we want to understand is, what is gold? Is it something that people can invest in? Is it just a precious metal? Is it just something to be used as jewellery? That's the purpose of the show this morning, and we're delighted to have Andrew here with us to have exactly that conversation. So let me first of all introduce Neville. Neville, thank you very much for joining us, and I think it's fair to say that you've got you're going to be probably hosting the show next month when I'm on vacation. So welcome to the show, and thank you very much for joining us.
Thank you, Simon, for having me.
Thank you. And Andrew, thank you very much for joining us. It's a pleasure to see you.
It's a pleasure to be here.
Great. So gold. Let's start off with the very first question, and let's try and understand a little bit of the basics of gold. First of all, what is gold? We're not going to try and make this too sciencey, but let's try and understand the very basics. What is gold? What do people need to understand about it?
Well, I guess gold is a precious metal. It has got some very unique properties that mean that it's been recognizable as gold for thousands and thousands of years. I think one of the most important things to realize about it is that it is firstly incredibly rare, and the other important aspect to remember is that it doesn't oxidize. So it'll be as shiny as it is today if you locked it away for 1,000 years and took it out at that point in time. So that's one of the reasons that it's very good from a jewelry perspective. And its rarity and its ability to be instantly recognizable is one of the reasons that it sort of works as a currency to some extent too. But,
right. Yeah. And so gold is a metal. Gold is something that's not going to oxidize. It's hard. It's not going to disappear. It doesn't react very well with anything else. And that is a principal reason, I suppose, why over the years people have used it as a currency. They've said, well, this thing's not going to change in form or substance. It's not going to become something else. It's not going to react with something else. Therefore, this lump of gold is going to be the same lump of gold in the future, and therefore we can assign a value to it. Is that kind of why gold has taken on that mantle of a currency or a quasi-currency?
Yeah, that seems to be to me to make a lot of sense. I mean, you know, thousands of years ago it was used as a store of value, and those are the reasons that seem to make the most sense. I mean, it's very difficult to sort of go back in time and be definitive about it, but there is something about it that attracts a certain sort of person, and in some sense makes them absolutely crazy. They get what is termed gold fever, and they spend their lives hunting for it, trying to find more and more of it. So there's something magical about it too, I suppose.
Well, certainly, ladies love it from a jewellery perspective. Maybe gentlemen, perhaps less so from that perspective. But one of the key questions I have, and this is about the topic in general, is gold a currency? Is it an investment, or is it simply a jewellery item? And that's something I think I struggle with as an individual to understand properly, because you have so many people who want to buy gold, and they want to buy it for various reasons. In India, for instance, there's a huge marketplace for people buying gold for jewellery purposes. It's a huge commodity in that sense there. And yet I have friends who think of gold as being the only thing you should ever invest in, because the world's about to end at some point, and therefore you need to have gold because this paper currency won't be worth anything. And then on the other hand, you have people who say, well, you need to hold gold, you need to hold it in a vault, because central banks around the world are going to do crazy stuff. They're going to print lots of money, and you're going to have inflation, and gold's going to be an inflation hedge. So I struggle trying to understand what asset gold really is. Is it a commodity? Is it a currency? Or is it just a jewellery item? Neville, when you look at gold, what's your first reaction? Do you think of it as a currency, commodity, jewellery? What do you think of it as?
I think it's a bit of both. I think, to Andrew's point, gold has kind of stand at the test of time from a currency standpoint. You look over thousands of years, gold continues to be kind of that value asset that people seek, I guess, in times of dire emergency. When you compare it to other currencies, I think gold's really kind of stood the test of time. So you almost look at gold as a asset when times are good, and as a currency when times are bad. So a bit of both of that. I mean, if you compare it to money or fiat currency, what governments have tend to do over time is they've tend to just continue to print that money. We've seen that in the U.S., we've seen that in Japan, we've seen that now in Europe. So we're kind of entering a phase right now, which will be interesting to see what the impact of gold or gold prices will have with all the monetary or the various federal banks actually printing money. Whether gold becomes that what has historically happened, where it's kind of come the currency of choice in far as protecting from governments printing too much money. So to answer your question, I think it's a bit of both. Where it is right now is very interesting. The price of gold has held up well, and I think maybe Andrew can add a little bit more on that. Yeah,
just to clarify something you said there. You mentioned that nowadays we operate in a fiat currency system. Just to explain that for people, so a fiat currency basically means that you have a currency based on belief. It's not based on the intrinsic value of an asset. So gold itself, for instance, trades at, say, $1,100. A fiat currency is a currency simply because people believe it to be a currency. And they believe it to be a currency because the governments say that if you walk into their central bank, you can exchange this currency for new currency, and they will protect the value of it. So that's the difference. And I suppose why people look at these commodities, whether it be gold, silver, platinum, whatever it might be, they look at them as being intrinsically valuable because the central bank and the government can't do something crazy with it. I suppose that's kind of the story you're getting at ultimately.
Correct, yes, okay. Definitely.
Great. So, but one thing you said, and I want to ask Andrew this point, one thing you mentioned is that gold's held its value well and it's maintained itself in a positive way. And I dug up some charts from the internet and from Bloomberg, and was looking at this. And if you go back, goodness me, you're going back a few years, but in 1970, an ounce of gold sold for $36 US dollars. And then 2012, at the peak, the same ounce sold for $1,772. Today, we're around about, $1,100, $1,200. And so what I'm trying to understand is it holds up well, but someone in 2012 who bought a lot of gold has found themselves now $500 worse off for everything they've owned, which is a 30-odd% decline. So, Andrew, how do you help us explain and understand this huge change in the price of gold? Is this something to do with what was called the gold standard in the late 70s, or is there something more fundamental going on?
Well, I think the change in the price of gold is specifically not to do with the gold standard. The gold standard really fixed the price of gold In the early 1900s, gold was fixed at $20 an ounce, roughly.
So can you explain what the gold standard is, just for those of us who aren't so familiar with it?
Yeah, so the gold standard was a system whereby a few very powerful governments got together and said, we need to sort of stabilize our economic policy to some degree. We are going to say that we're going to peg our currencies to each other, and we're going to back that with gold. And that was very good at doing one thing. It was very good at controlling inflation. So gold is really considered an inflation hedge to some extent. But it was very bad at doing other things. Governments these days like to inflate themselves out of their problems, and that's what we've seen with a lot of the money printing. So as throughout history, as we entered into sort of some world wars, there was a requirement to inflate, and essentially the gold standard broke down. So they came up with the gold standard in 1920, about 1930 thereabouts. I think the Bretton Woods system came in a bit later than that. And again, they tried to back the currency with gold, and it works as a control on inflation. But that's not the only thing that sort of effective monetary policy seeks to do. Essentially, today what we're seeing is that there is some aspect of a speculative demand. What really drives the gold price is the investment related demand. That you have a jewelry related demand and an investment related demand. The jewelry related demand really gives a floor for the price. But the investors will sort of look towards things like sort of inflation expectations, the amount of money supply, and they'll say, look, gold, you can't make gold, you can mine it. I think if you look at the amount of gold mined annually, your increase in gold money supply relative, I suppose, to what's in existence today would only be 2%. Whereas your increase in money supply, the amount of paper that's printed, would be north of 20-30%, depending which country you're talking about. So that's one of the reasons that when there are fears of inflation, then fears of massive amounts of money printing, then investors decide that they're gonna push towards gold. And like everything, you overshoot on the way up and you overshoot on the way down. So that's kind of where we are today.
I read a stat, and Andrew, correct me if I'm wrong, but was it something that there's close to right now, based on gold production annually, it's close to 100 billion? Does that sound about right?
Annual gold production would be in the order of about 2,500 tons a year. So I'm trying to do the sums in my head.
2,200 tons, 500 multiplied by 1,200 an ounce. How many ounces in a ton?
Yeah,
that's better than my maths.
I think you're probably not too far off the mark there. Yes, but
right. So if you just look at, if let's just call it 100 billion annually in gold, and you look at, the amount of money that the U.S. government has printed in the last 5 years, I think it's close to 4 trillion. So when to your point, that's a huge discrepancy.
Yeah, and
you can see why it kind of holds its value as being that, so more of a supply and demand commodity.
Yeah, and gold is not the only thing that people have to invest in, so we shouldn't look at that as the only alternative to currencies. We're getting into some crazy things, bitcoins and everything else. I'd rather own an ounce of gold than the Bitcoin equivalent today, but I'm probably just a little bit old-fashioned in that regard. There are many things people can invest in. We saw a Jackson Pollock painting get sold for $140 million in 2006. Where is the intrinsic value in that? What will that be worth in 1,000 years' time? We don't really know, but gold will be the same thing. It will be the same ounce today as it is in 1,000 years' time, and that's why people like it so much.
Fair enough. Look, we're gonna pause for a break in a few seconds, but when we come back, what I want to ask you is, I just want to understand the basic mechanics of, if someone who's listening says, look, I'm fascinated by gold. How do I go out and find gold? What do I need to do? How do I find it? And also I want to quiz you on talking about why gold is worth something. I can understand why other metals, something like palladium or platinum or even silver, because they're used in electronics, they're used in automotives, lithium, they're used in the battery industry. I struggle intrinsically to understand why gold, which has no obvious to myself material uses in the world, why it's worth so much. So we're going to pause for a break, and then when we come back, I'll give you a few moments to think about that, and we'll come back with the answers, hopefully.
Sure.
One TradeX knows there's more than one way to invest. One TradeX is the Cayman Islands' only fully licensed online broker-dealer, offering discount trading services to individual investors and traders, hedge fund managers, and family offices. One TradeX has the most competitive online trading prices of any offshore broker worldwide, with no custody or management fees, free demonstration accounts, and no charge to open an account with a $5,000 minimum deposit. Trade stocks, options, futures, bonds, and Forex. Learn more and open your free demo account today at onetradex.com. One TradeX, the Cayman Islands' #1 choice for online brokerage.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands and sponsored by One TradeX.
And now, more Money Sense.
Welcome back, and I'm joined again by Andrew and Neville. Andrew and Neville, thank you again for joining me. Before the break, I mentioned I had a couple of questions for you, Andrew. The first one was, how, if someone who is living on Ireland, listening to this, and they're fascinated by gold, and they love the idea of exploring for gold, what's it actually going to cost? Could they do it? Can someone actually go out and explore for gold, mine for gold, hunt for gold, whatever you want to call it? And what's it actually going to cost them to find something substantial?
Yeah, sure. I guess the first answer to that question, the first thing they're going to need to buy is a plane ticket, because there's no geological structures on the Cayman Island that I'm aware of that actually host it. Secondly, if you wanted to do it on a very small scale, you could probably go get a day license and buy a metal detector and then wander along a beach or some sort of structure that hosts gold nuggets. And if you're very lucky, you might be able to find one or two. You're never going to make a lot of money out of this. It should probably be seen more as a hobby. If you want to get involved in the serious end of the business, it actually takes a lot of money, and it takes a lot of time. I would estimate, getting a moderately sized mine up and running from when you first from when you first find the gold deposit, so the ore within the ground that hosts the gold, until you get all the necessary licenses, do the studies that are required to put it into production and then build the mine. You're probably looking at anywhere between 5 to 10 years, and probably about $100 million. So it's not a small, not a simple business. And it's in this day and age, environmental legislation can be very tricky. So you really do need to get a group of professionals who know exactly what they're doing to help you with that task.
So assuming one of the listeners has a spare $100 million lying around, a plane ticket to wherever they want to go in the world, where in the world do they need to go to find this gold?
Look, I mean, it sort of historically, people have rushed to sort of places like California and South Africa and also Australia. There have been some massive gold rushes there. But today we're finding that a lot of the new production and a lot of the good geology lies in places like Peru, Chile. There's a lot in Argentina. In places like the Democratic Republic of the Congo, they've not had much modern exploration applied because they've been such difficult jurisdictions in recent history. So areas like that, you can still find really massive, high-quality gold deposits. It's just getting to them and positioning yourself in an environment where you actually have the right to get to that gold is also quite tricky there. But that's where I would go looking for it.
Okay. So everyone needs to book themselves a plane ticket to the Democratic Republic of Congo. I don't know what the Ebola situation is in that part of Africa, but hopefully free from it at the very least. So the other question I had for you, and this is something which puzzles me. I'll confess I'm not an expert on gold. I don't fundamentally understand why people really buy it. Because it's a lump of metal, albeit shiny, and albeit something that is not going to degrade over time. So I get the physics of it. But when I look at different metals, I can look at, say, lithium. You can go through the periodic table. You can look at lithium. You can look at platinum, palladium, silver. All of those metals have actual uses in engineering, in computing, in batteries, in real-world applications. You can do something with them. And then you look at gold, and apart from a few gold-plated things here or there, doesn't seem to be that much use of gold other than storage, looking pretty. So help me understand. Maybe I just don't understand the jewellery aspect of it, but help me understand the industrial uses of it.
Well, I suppose it's the same for a lot of commodities. We look like very expensive paintings sell for hundreds of millions of dollars. There's no real use for that other than the person who's lucky enough to look at it full time. So I think if you look at it from a jewelry perspective, that takes up about 2,500 tons in terms of annual demand. You've got about 1,000 tons of demand that comes out of investor-related demand, and then you've got central banks are buying some in this day and age. So you can sort of think if central banks are buying gold, it probably is something a bit tricky with the fiat currency system as we know it today, because 10 years ago they were selling. They used to sell about 500 tons a year. Now they're buying about 500 tons a year. But there actually is an industrial use for gold. About 500 tons a year goes into things like dentistry. Admittedly, that is falling with the advent of ceramics. That's you don't see too many gold teeth walking along 7 Mile Beach these days. But you do actually use it in your mobile phone. So everyone has a mobile phone. Every mobile phone has probably about 50 cents worth of gold in it. So you multiply that out by the number of mobile phones in the world, and there is actually a use. It is an incredibly good conductor of electrons. The electrons move very freely through it. So it does have a use. It's just too expensive to use in things that copper wire is also very good for using. So it does have a use.
So apart from the speculative, apart from that, there is actual some industrial use for it. Unfortunately, I can't take my phone and suddenly make $1,000 by having an ounce of gold. There's only a few milligrams or something in it, you're saying.
Yeah.
That's disappointing, I suppose, but that's just the reality of the world. So then moving on to the next topic area I want to focus on is gold supply and demand. Well, the supply and demand by investors for gold. Let me phrase it like that. If someone actually is out there and saying, okay, I'm finding this idea of going to build a mine or developing a mine a little pricey, 100 million, 10 years, got to go to some place in the world I may not want to. What other solutions do they have to actually invest in gold? What are the other solutions? So Neville, Andrew, help me out with that one.
I think one of the natural investment alternatives is not actually owning the physical gold. Is owning an alternative through an exchange traded fund or through the stock market, where you can actually buy the value of gold. You don't actually hold it, but you benefit from the price movements. And I think when you look at gold as an asset, you mentioned price movements and comparing kind of the highs to lows. I think it hit its all-time low or a relative low recently in 1999 when it was down to 270. So if you had bought gold as a stock or as an investment in 1999 where it was $270 an ounce, and now you hold it to where it's $1,200 an ounce, you would have done fairly well. So market timing is an issue, and I think the timing of gold is more of a 10 to 20 year period versus you look at your average business cycle, which moves more to kind of 7 to 10 year, 5 to 10 year varies. So exchange traded funds. Then the other alternative is actually buying a share of a physical gold company that's traded on the exchange, or in Andrew's case, if you have the opportunity to invest through a private equity fund or have access to that, and those, and I'll let Andrew speak about that, but it's much more hands-on, and those guys are going in at early stages, holding the asset for a long time, and hopefully making, considerable returns.
Do you have a view on that then, Andrew?
Yeah, I think, unfortunately, the best way to go about it is obviously that is most profitable for you, and I think that the advantages of investing in a mining company would be that the mining company, say, it's producing gold at a cost of $600 an ounce, and it's selling it at $1,200 an ounce, and you therefore are really buying gold at a cheaper price than you could on the market. So there's an argument for owning a share of gold. But the issues with mining companies is that the mining companies really need to be very well run. And unfortunately, if you look at the history of gold mining companies as an equity class on a per share basis, they haven't really returned fantastic results over the past 10 years. It's the gold price did go up, the gold companies went up, and they came straight back down again. Unfortunately, since the high in about 2011, if you'd invested in a gold equity, you've probably lost 70% of your money. That's just the state of play at the moment.
I guess one of the things that an investor should consider is if you buy, you can do a variety of things. You can walk down the street, there's a couple of companies in Cayman, and you can buy a lump of gold and you can store it in a vault. and hope that the Hatton Garden episode doesn't happen in Cayman, where they managed to rob that big jewellery store in London for over a long weekend. But you can do that. You can buy an ETF, and there's some issues that people need to be aware of ETFs, in that they may not actually hold all the gold they say they hold, and that's something that you do need to be very careful about. But the other thing is, you can buy a mining company which mines for gold. But the problem is, I guess, that if you buy a mining company, you're exposed to more than just the price of gold. Because that mining company, if the gold price goes up 30% and declines 30%, and you buy an ETF which is invested in gold, you'll be up 30% and down 30%. But a mining company may be up a lot more and then maybe down a lot more. Is that true as well?
Yeah, absolutely, because the mining company has got other issues that it's facing. When commodity prices go up, governments typically say, well, we'd like a little bit more of our share. So things like royalties go up. But look, one thing we had addressed here, and there's actually a couple of good companies on this island, is that you can get involved you can buy a company that invests in gold royalties or gold streams, because they hedge themselves out against the cost of the cost of production. So they give a gold company some money up front, and then they get a stream of revenue from that company or from that mine up until that mine stops producing. And that's actually a very clever way to own gold.
So then you're investing in mining companies, if I understand it, you're investing in mining companies, but in a more diversified way, by investing in a firm which gives or takes royalties or streams of revenue from a variety of different mines.
That's correct.
So you're not exposed to just one company, and that company finding that its mine, which it thought was great, actually has nothing left. You've invested in a broad range of possibilities.
That's right, yeah. Because
okay, so and then if you were to try and rank the riskiness of the different investments, and this is something I think it's always important to do, you've got buying the physical gold, you've got buying a streaming company, or you've got buying investing in a private equity fund, which might be investing in these sorts of things, or you're buying the actual producers through the regular stock market, the junior miners, the senior miners, whatever you want to call them. Where would you say those things rank, and how would you consider the riskiness of those four different investment opportunities?
Look, that's a pretty broad topic, but if we look at the securities, buying a company, for example, within the companies that are trying to mine or are mining gold, you've got a whole range of risk associated with that. An exploration company, one that has an idea that there may be some gold within the geological structure, you can make a huge amount of money out of that, but you can also lose a fair amount of money out of that. So the riskiness of an early stage exploration company is
I guess
is
if
very
they don't
high.
find anything, you lose all your money.
You lose your money, yeah, but if they do find something, they may find something that's not economic, so you lose all your money anyway. But,
or they might find something and then run into issues with government,
sure,
or certain environmental issues, and then all of a sudden there might be good gold there, but they actually can't get at it.
Yeah, but on the other hand, you do stand to potentially make 100 times your money if you do invest in the right one. So, typically go speak to a geologist or a mining engineer, somebody who may have some idea about it before you buy an exploration company. Secondly, producing companies are very good. As long as they have got good management that have worked in that sector for a while, I'd say the risks of those today, where we are at the moment, is very low. Costs have been managed down very well, so I think I think over the long term you would expect to see some positive return out of that. Streaming companies are lower risk because they have hedged the cost out of their business structure, which is very good. ETFs, again, you're just essentially buying gold, but you don't have to actually take physical possession of it. So that would be probably the lowest risk.
Okay. Fascinating. Well, gentlemen, Andrew, Neville, I really appreciate both of you joining me. And Neville, good luck next month on the show, and I'm sure it'll be a fabulous one. Just to remind the audience, moneysense@candw.ky if you want to write in with questions or suggestions for topics that you want us to cover. If you are planning on investing in gold or any other commodity, obviously be careful. There are a lot of risks involved, and Andrew explained that you can make a lot of money, but also you could lose everything that you try to put in. So be incredibly careful when you are out there investing. That's all from us today. Thank you very much for joining us, and we'll see you next month.
Money Sense is brought to you with the support of OneTradeX. OneTradeX, the Cayman Islands' #1 choice for online brokerage.
shaken yet standing firm. This is Radio Cayman in the Cayman